What's up, good people? It's your boy Zay, and I'm back with another video. So today's video is going to be full of value, all right? The reason being is because of a couple reasons. Number one, this is going to be the final video for 2020. What I want to do is take the rest of 2020, so mainly December, and plan for 2021. I really got a lot of great video ideas in my backlog from questions you guys have asked, and I really want to make sure that it's quality content that I'm bringing to you guys in 2021. So the plan is to make this the final video for 2020 and then use the month of December for planning and recording and just getting ready for 2021. Not to mention, you all know that if you watch any of my previous videos, I do have a daughter on the way. She isn't here yet as of recording this video, but she could be here any day now. And so I want to take the rest of the month to bond with her as well as help my wife out around the house so y'all can understand. But with that said, I do want to make sure that the video I leave y'all with is jam-packed with gems. So today's video, what I'm gonna do, and I gotta give a big shout out to my bro Tivo for this one, is a lot of people have been asking about how do I come up with a good strike price for a leverage play or like a swing play. So I was a little conflicted with doing this video, but I think with the tools and the strategies that I'll show you today, I feel fine that you'll be properly trained, you know, if you're gonna take a risk like this. So with that being said, today what we're gonna do is we're gonna hop into bar chart and I'm gonna show you how you can calculate a strike price for a leverage play, meaning, you know, it's usually gonna be shorter in duration as far as your trading time frame. And then what I'm also gonna do is throw in an additional gem that big bro Mark and Tebow pointed out is you can use bar chart and look at the options price history on a chart and add indicators to show you whether or not you're getting a good deal. So I know that was a lot, but we're gonna go through all of it. Y'all know how I like to do my videos, very tutorial. We're gonna walk through live interactions and do some examples. So I appreciate y'all sticking with me through that long-winded intro. Now, before we jump into the video, y'all already know I need y'all to like, share, and subscribe. Big shout out to everybody that helped me get to 2,600 subscribers within year one. Additionally, I just got notification from YouTube that I will be able to monetize my channel going into 2021. So big shout out to all the cousins, all my Running Up fam, all the first gen wealth builders, everybody that has been supporting me and helping me reach this big milestone. I love y'all. I appreciate y'all. So, as I said, don't forget, like, share, subscribe, and without further ado, let's get to the gems, man. All right, family, so we're going to get into the video now. So, before we jump in, I want to explain my process. So, for me, I treat leverage plays a little bit differently, and we're going to cut straight to the chase, right? So, after this video, if you have any questions or anything like that, feel free to drop them down in the comments, and I'll definitely answer them for sure. So, I'm gonna cut to the chase, right? So when it comes to a leverage play, there's a couple of things that I consider. Number one is the stock on a pullback, right? Because when you think about a leverage play, it has to be the right opportunity. And typically opportunities present themselves during corrections or pullbacks, right? The second piece is the time frame. How long do I want to be in this leverage play? For me personally, I like to do 3 months, 6 months, 9 months to a year, or leaps, right? And then I'll break it down. So if I'm gonna do a 3-month play, that means I need to buy at least a 6-month contract. If I'm gonna do a 6-month play, I need to buy at least a year contract. If I'm gonna do a 9 month to a year, you get it, right? So then you got leaps. So that's the second piece, right? So you have the opportunity, which is the stock is on the pullback. Number two is you have the time frame that you want to do this leverage opportunity, right? So now let's get to the part of how do I calculate a strike price, right? So give me a second. I'm gonna pull up, we're gonna use a copy of the Dark Knight strike price formula. So if you don't have a copy of that, I will find the video and post it in here and the link to where you can download a copy of that. So shout out to Mark and Coach Head for that document, as well as we're going to pull up barchart.com because that'll be the other resource that you need to do this example. So give me a second. Let me pull that up and then we're going to go right into that part. All right. So let's say that I have a stock and I'm looking at doing a leverage play. So let's use Adobe, for example, right? So we're going to type in and use this, the strike price formula. So I will put in Adobe, right? So the current price is $477.03, right? The 52-week high. Let me go to Yahoo Finance and figure out what that is. So give me a second. I apologize. I probably should have had this pre-populated, but you know, I like to do things in with y'all and walk you through it so you can learn. So we'll go through Adobe. The 52-week high is, I can find it. Give me 1 second, y'all. Here we go. 536.88. So 536.88 is the 52-week high. 536.88. Boom. All right. Now, here is where your leverage plays, and changing up the strike price formula is going to be a little bit different for your leverage plays, right? And this is where bar chart comes into play. So let's say I wanted to do a 6-month position on Adobe. Well, what I'm going to do is I'm going to go to bar chart. I'm going to type in Adobe. All right. Make sure these screens are big enough. I know people be like, your screens be so small. All right. So Adobe, right? So we got the 52-week high, right? So now what I want to do is go down to the section that says price performance, right? And then you're going to click see more. Sorry for all these pop-ups. Clearly, I don't pay for no memberships. Free info only. So once you pull up your price history, right, what you want to do is look at your 6-month numbers. So for Adobe, in 6 months, it's up $101.86, so 27%, right? So when you're using the spreadsheet, you want to use this number here. This is the number that you want to bring in, whether you're doing a leap, whatever, you want to bring in the dollar amount. So if I bring in 101.86, right? Boom. Now, this is typically where it's like, oh, it's a 2-year, you divide it by a 1.5 years, if that's how long you're going to be in a position. Well, I'm only planning on being in this for 3 months, right? It's a 6-month position. And so I'm only going to be in it for 3 months. So I'm going to divide it by 3. Then this gives me not the 2-year price, but my short-term price, right? Now we know this accounts for shaving 10%, but because I'm in a leverage play, maybe, and I'm buying during the correction. Remember, I said you usually buy during the correction. I don't need to necessarily account for the shaving, right? I don't need to account for this 10% correction. So what you could then do is, if you want, is take it out, right? And you don't have to do no shave. Now, this basically gives you, and you don't need to divide this by 2 either, because remember, it's a short term, right? So this basically gives you a strike price of 510 for a 6-month play, right? Now, if you want to confirm that this strike price makes sense, let's go look at Adobe's chart, right? So if we look at Adobe's chart and we say, okay, does this seem reasonable in 6 months? And 6 months would put us, what, December, probably around April, maybe even farther. I mean, look at it. Adobe's already crossed the 500 mark a couple of times, and it's been as high as 536. So realistically, is 510 a comfortable number? Heck yeah, right? So then, now that you have your strike price for your leverage play, the last thing I like to do is get confirmation, right? And so what we're going to do is we're going to use a little trick that our good brother Tebow taught us, right? So I'm going to go back to bar chart, and I'm going to go look at the option prices history. So in order to get there, you're going to go into options and hit option prices, right? Now, what you want to do is you want to change your expiration to, again, the time frame you were thinking. So we said it'd be a 6-month play, so that puts us at about April, right? Now, the strike price that it gave us was 510. So let me just stick with that. I'm gonna do 510. So I went here to 510. So I'm under calls, and I went to the strike price of 510, right? So let's go in here, and then the next thing you can do is twofold, right? So we're going to start with the price history. All right, price history. What you want to do then is sort it by the lowest prices. So the lowest prices for this contract was $20.85, so basically under 21. And that went on November 24th and the 25th. So you want to kind of note the days, right? Then you want to look and say, okay, well, what were the next lowest prices? So we got a 23.47, a 24.30, 25.90, 26. And then as you can see, once you're, 28, and then it goes all the way basically up to 40, right? And then as the highs, I mean, these things go as high as 78, look at that 63. So they've definitely paid up to $58, $54, right? So these are some good prices. Based on that alone, right? When you're in your leverage play, or you're thinking about this leverage play, when you look at the bottom percent quartile, I personally would say, hey, I'm comfortable paying anything below $30 a contract per contract. Because look at that. If I can get anything under $30, that's pretty much a solid price compared to the entire price history. You know what I mean? And so for me, that's how I would set my premium price target of what am I willing to pay. I don't want to pay the $30, but if I can get it under 30, that's going to be great. So that's one thing you can do to add in that element of, okay, I have a strike price, but how much am I willing to pay for this leverage play, right? And then here's the final element that I'm gonna add in. And again, this is the GOAT called this one out, right? So let's go to your option prices, all right? So we're still under our 510 April 16th. So let me go back to that again. Actually, yeah, April 16th, all right? It's gonna load up, move that out the way. Let's go back to our 510. Here's another cool trick, right? Go to options chart right here. So the first place we went to was price history. The next place we're going to is options chart. All right. When we go to options chart, it's going to give us a line graph, and you can add in studies. So I've already added mine, but you can add in your Bollinger Bands. You can add in RSI. I'm gonna add that in. All right. And this right here will give you a great view of what is a good price to get your options for your leverage play you're looking at. And this also helps you figure out where would you want to sell it, right? Because let's go into the example, right? If we're looking, we see the RSI was here. This would have been a good time to get to buy. Also, these days when the RSI was pretty low, which puts the price right around 21, 21.56 and then 21.56. Now, somebody that buys could either be looking to get on the lower Bollinger, which is like a great price. So you could pretty much say anything from 21 under to 16 will be good price. And then you can say, hey, I want to sell if it gets to the top of the Bollinger, which is 42, right? So we just do some quick math on a leverage play, guys. And we're looking at Adobe. And remember, this is for the April. So this is all April. Where's my calculator? All right. So let's think about it. If we bought right here at 21.56 and we set our sale target at 42.50 or 42.25, which is the top of the Bollinger, 42.25 minus, we paid, what was that? 20, let's say 21.50. We'll say 21.50 just to keep the numbers even. All right, divide that by 21.50. We are now talking about 96% on a leverage play. That's almost 100% on your money. So you basically would turn 21.56 into 42.25. And now, mind you, that's just basing it off this Bollinger, right? So the last piece that I would say about your leverage play is that you gotta set realistic expectations as far as how much percentage do you want to gain or how long do you want to hold. That's why it's like this Adobe play. This is a lot shorter expiration date. It only goes out to April 16th. So 100% on a 3-month trade / 6-month position is great, right? Whereas if you think about like the XLY play, that was a year leverage, and we're expecting anything from 10-15x on that. So take that into account of how long the leverage play is and temper your expectations as far as return on investment. So with that being said, guys, I hope that this tutorial and walkthrough didn't move too fast, and that me showing you how to use not only the options chart, how to add the tools, we showed you the option price history, and kind of how to walk through how to develop a trading plan for a leverage play. If you still, like I said, if you have any questions or need me to maybe even do a second part to this, I will definitely do it. But I think what I want to do is give you that to chew on, because I don't want to add too much, because I know leverage plays can be a little bit tricky. And so, as always, this is not investing advice. I'm not a financial advisor or fiduciary, so please do your own research. But take this video and kind of use this and go through different examples. Remember the key points that we talked about, and do some, maybe even consider some paper trading to work on your leverage plays or stuff like that, until you get this process or your own process down packed. So with that being said, y'all, I'm gonna go ahead and close out this video. I didn't want it to be too long, but I wanted to make sure that, you got a lot of meat and potatoes. So as I said, we're gonna go ahead and close this out, and I'll catch you guys in a second. All right, family. So there you have it. That is the video, right? So that's how you use bar chart to figure out like leverage play strike prices, and kind of the process I walk through to figure it out. We also went through bar chart and used the options price history chart. Have to say that slow, while adding indicators to show you, whether or not it was a good price. And also, if you caught, there's a gem within a gem in that part as well. So you might want to go back and check that out. But as I said, guys, I hope you enjoyed this final video for 2020. I will be back. It's just a slight break to get ready for 2021 and make sure that I'm giving you guys my all and bringing great content. Gonna have some super duper dope updates coming to the channel in 2021. So I'm super, super excited. And as I said, y'all know I always love and appreciate the guys' support. So make sure you like, share, and subscribe to this video. And I see you guys in 2021. Stay blessed. Peace out.